In today's episode, I'm going to teach you a variation of my scalp trading strategy where I focus on using the 10-second chart in order to capitalize on the fast price action that occurs when a stock has breaking news. Now, today, I am more than double my daily goal, which means I'm going to teach a full-length class where we will use today's trades as a case study for how to use the 10-second chart and how to scalp breaking news. Now let's go ahead and jump onto the screen share. You're going to see that I'm currently up $24,821.82. The topic of today's class is scalp trading breaking news, and we're going to do it using the 10-second chart. Now, for those of you who have never traded with a 10-second chart, you can still scalp trade by all means with a 1-minute, 5-minute chart combination and, of course, using level 2. However, I want to show you how you can use the 10-second chart to get a little bit of a jump on other traders who are focusing only on 1-minute or 5-minute time frames. Now, there are a lot of advantages to scalping using a 10-second time frame, but you have to have the right tools. And the tools are not just charts. There's a number of other tools that you need in order to scalp in this way correctly. I'm going to share those with you as we go into this episode. So let's go ahead and put this up on full screen here. So let's go ahead. There we go. All right. So we got full screen. Now, this is today's trade. This was absolutely incredible. This stock had 13 consecutive green candles on the 1-minute time frame. This is a 1-minute chart. 13 green candles in a row. It goes from $2.50 up to a high today of $10.80. Nearly 300% return. I'm up $24,000 on the day. $21,000 is thanks to this stock. And for those of you guys who tuned in to my weekly game plan episode, which I upload every Sunday, and this is for those of you guys tuning in on YouTube, but also for Warrior Pro members, I said, this is why I'm going to show up every single day, because you never know when we're going to have breaking news. But last week was relatively slow. We had some stocks that gave us some moves, but none of them were big. In fact, we're early in the month right now. It's the 12th, and I've only had one day this month where I broke my daily goal. And we're like, well, it's the 12th, but we must be seven trading days into the month. Today's the 8th trading day. So only one out of those 7 days, I broke my daily goal. Now, the other 6 days were all small green days. These were base hit days. And for those of you guys who are tuning in, I was trading on my traveling trading station from a small little boathouse on an island off the coast of New England. And some people are like, why are you even showing up to trade? You're traveling, you're on vacation, you're only making $400 or $1,500. And I said, well, you're right, but you just never know when there's going to be a stock that has big news and puts in this, monster squeeze. And that's exactly what happened today. So this 15-minute window right here from the beginning of the move, 13-minute window, these 13 green candles in a row, this right here added, it more than doubled my profit on the month, right? This was a huge green day for me. So the topic of today's class is, I'm going to talk about the definition of scalp trading, how to scalp. I'm going to talk about how to use the 10-second chart as a scalp trader. I'm going to share with you my scalping strategy. I'm going to share with you the tools required to scalp, because you got to make sure you've got the right tools. And I'm going to give you my recommended reading list for those of you that want to continue learning. Through this episode, I'm also going to share links to a number of other videos that you guys can check out that are related or sort of a tangent to the specific topic. Okay. So number one, what is scalping? So I think most of you probably understand this, but for those that perhaps don't, scalping is a fast trading strategy that involves quickly buying and selling shares in order to profit from relatively small variations in price. In order to generate substantial profits from small variations in price, traders generally use larger positions. So let's say, for instance, we've got the whiteboard here. Let's say you're looking at a stock that's trading at, $4.85. And this was the first price. This is where I got in gnln today. That was my first entry. It was right around 485. So if I'm in this at 485, and let's say I take profit, that's my buy, and my sell, let's just say, is $5, that's 15 cents a share. So 15 cents a share. So, how much money is that? Well, if you're trading with 100 shares, it's $15. If you're trading with 1,000 shares, it's $150. If you're trading with 10,000 shares, it's $1,500, right? 1,500, something like that. There's the comma. So this is the sort of idea with scalp trading, is that these small gains, yes, with small size, they're relatively small, but most traders who are scalping will increase share size up towards maybe not 10,000 right away for most traders, but up in the 2,000 to 5,000 share range. That's where a lot of people kind of get comfortable. And then when they see something that looks good, maybe they'll scale up to 15, 25,000 shares. So one of the things that is interesting is that the exposure risk of scalping is reduced in part due to the limited period of time a trader's holding a position, right? You're holding 10,000 shares, but how long is this trade? Less than a minute, maybe 2 minutes. It's such a short period of time that your risk, one factor when you're thinking about risk in trading is how long you're holding a stock, right? If you're going to hold a stock for a week, you're taking a lot more risk than someone who's holding it only for an hour, even with the same amount of money. And that might be hard to kind of understand because it's like $10,000 of risk is $10,000 of risk. But taking that risk over the course of 7 days, the whole day, all night, that something could happen, news could come out, in total, that is a lot more risk that you're taking than someone who's buying and selling, getting in quickly and jumping back out. And so one of the reasons that scalp trading was really, I'm going to tell you why it was appealing to me in just a second. So I'll just stay on track here. Okay, so most scalp traders will aim for high accuracy. Most scalp traders will take dozens, if not 100 plus trades in a day. But you need the right tools to scalp trade. And scalp traders must enforce strict stops on their trades. A stop is your max loss. You have to have a max loss on your trade because if you let your losers get too big, it's going to be a problem. So when we talk about what makes scalp trading risky, it comes right back to this same point that you have to use larger positions. And so if you're in a 10,000 share position and you have the misfortune that in that moment, the stock drops 50 cents a share, you're down $5,000 like that. So scalp traders have to enforce really strict stops on their trades. Otherwise, the losers will be larger on average than the winners. And this is very common. Negative profit loss ratios are not uncommon for traders that are scalp trading. A negative profit loss ratio is when your average losers, let's say, are 500 and your average winners are 450, something like that. Here, your losers are bigger than your winners. So you've got a negative profit to loss ratio. This is very common. Now, a slightly negative is okay. Something like this, where your winners are 250 and your losers are 500, that's most likely not going to be sustainable or a profitable strategy for most beginner traders. It's just too inverted. In fact, with this, you would actually need to be right 66% of the time before commissions just to be break even. Now, to give you some context of where I'm at in terms of my metrics, I'll show you right now. Let's see. So this is the software that I use right here. And as I mentioned, you can see the last few days, which the trades, the profits were relatively small. So we can just look at, we'll just look at the last 30 days right here, just to sort of pull some metrics. So last 30 days, profit loss ratio. So average losing trades, $323. Average winning trades, 574. So that's a positive profit to loss ratio, right? And the accuracy is 67%. Average hold time, 5 minutes for winners, 4 minutes for losers. These are really nice metrics. Now, the reason this all accumulates to $196,000 of profit over the last 30 days is because of the number of trades I'm taking, 692, right? Now, if I was only taking, let's say, 10 trades, then no doubt 10, I would only be up a very small fraction. I mean, 10, if I traded 70 trades, I'd be up $19,000 just based on 10%. So one of the things that makes scalp trading really appealing is the fact that it's a lot easier to earn 10 cents per share on a trade than to earn $1 per share on a trade. And there are a lot more opportunities each day to make 10 cents per share than $1 per share. And that's how in 30 days, I was able to come up with 692 trades. 692 individual trades over the last 30 days. That's a lot of trades. But the fact is, when you're setting your goal at only 10 or 15 cents per share, it's a lot easier to hit that. Now, if we actually look here, we can compare over the same period of time, just for the sake of looking at these metrics in a little bit more depth. We're going to look at winners versus losers, but the date range will be just last 30 days. So we'll just do the last 30 days here, winners and losers, generate report. And what you're going to see here is my average winners are about 8 cents per share. My average losers are about 7 cents per share, which gives, approximately 1-to-1 ratio on the average winner to average loser. But 8 cents a share. How can 8 cents a share give a total gain here of $267,000? This is before taking away the losses. How is that possible? Well, think about it. Well, so what is the average winning trade? The average winning trade is $574. So where's my phone? So this is just really quick math. I could probably more or less do it in my head, but just to give you the exact number. So we're trading, let's see. So $574 average winners divided by 8 cents. So that means my average position size is 7,175 shares for the last 30 days. Okay, so right kind of in this zone, right? So we'll make a new one here, just custom for me. So 7,175 shares equals $574. Okay, so now you do that 650 times within the last 30 days, and boom, that's $267,000 of profit. Minus the losses, still up $196,000 over the last 30 days. Okay, so I think the big takeaway here is that there are a lot more opportunities each day when you set your standards lower. And I'm saying standards, it's a little demeaning to the trades. I don't mean offense, but a scalp trader is going to be willing to trade setups that someone who's trading on the 5-minute or 15-minute chart would never consider. And to be honest, let's look at the 5-minute or 15-minute chart on gnln. All right, so this is the 5-minute chart. Where would you have taken a trade if you only used the 5-minute time frame? Maybe right here. That's the first 5-minute pullback, but you're really extended off of your moving averages. Let's switch to the 15-minute chart. It's just going to be the same. The 15-minute chart's going to show you 0 potential entry. Basically a giant spike up and a pullback. Now, maybe we curl later, but a 15-minute or a 5-minute trader would have missed this entire 300% move. Now, is that okay? Listen, if that's your strategy, by all means, trade what works for you. For me, I don't want to miss a 300% move. If a stock goes up 300% in one day, if I'm not capitalizing on that, I feel like I'm messing up. I'm doing something wrong. That's just me. So then the question now is, if you're interested in scalping and you want to trade these types of big percentage movers, how do you do it? How do we approach it? So I'm going to add a couple more things for the pros of scalping. Number 3, I would say it's the only way to trade a stock that is already extended beyond a safe entry for someone trading on a longer time frame, like the 5-minute or the 15-minute time frame. And it's one of the only ways to trade breaking news. If you're not scalping, trading breaking news is going to be almost impossible. And it provides, for me, almost instant resolution when it works. And this is what I like. So now let me tell you why I found scalp trading so appealing when I was getting started. So when I got started, spam call, whatever. So when I got started, I had a relatively small account and I was trading with money that I had gotten from my father when he passed away. Now, some people occasionally are a little bit confused about sort of my history of trading. So I took my first trades in the late 1990s during the dot-com bubble, during a school semester that we had that was dedicated to the stock market. Now, those were paper trades. I was practicing. But I'd started as a teenager. I opened my first account when I was 17 years old, 16 years old. This was while I was in high school. That was my first real money account. And then I didn't trade for a few years. I took a break and my father got sick. He had cancer and he passed away. And then when my youngest sister turned 21, which was a few years later, we each received $100,000. which was at that time an incredible amount of money. And I didn't know what I was going to do with it initially. So I ended up not doing anything with it at first. I just put it in a money market account, and that was at a time when the overall market was terrible. So over the course of about 2 years in a money market account, it lost value, it lost money. And at that point, I kind of thought to myself, maybe, and this is very naive, but I thought maybe if I managed that myself, I could earn enough money on growth each year that it would cover my cost of living. And since I had this friend in high school who had made $16,000 on a penny stock, I thought if I could just do this 3 times a year, I would be golden. So initially I set up an account with E-Trade and I put in like 5,000 bucks. And right away I got flagged PDT. Pattern day trader rule, I took too many trades. And so I was like, all right, well, shoot. So I added more money to 25,000 so I had enough money to day trade. Now, I later learned about the offshore brokers that a lot of people use, but at that time I didn't know about them. So I put in 25,000, had, just above that level, and I just kept trading. And, what ended up happening for me was every couple of weeks, my account would drop below 25,000 and have to add more money. And then I'd make a little money, and then I'd lose it. I'd make a little money, I'd maybe spend some of it to pay bills, and then I would lose it. So at the end of my first year, I had made some profit, but I had spent everything I made, and then I had some taxes. The next year, I went net negative. And my cost of living, I was putting on credit cards, so I wouldn't have to take money out of that trading account to pay my bills. So I ended up depleting everything that I had gotten from my father down to the $25,000 account, but I had $30,000 in credit card debt. I then took a $5,000 loss on the first week of a new month. It brought my account down to about $19,500, and I couldn't day trade. And at that point, I was like, oh my God, what am I going to do? So that for me, I had to kind of hit that rock bottom in order to have my catalyst, my turning point, which I'm grateful for. The sad thing for some traders is that they'll start with $200,000, $300,000 and they'll lose all of it before they hit rock bottom. And it's not until sometimes you hit rock bottom where you feel forced to make a change. It's kind of like the pressure of those circumstances forces you to really analyze what you're doing. And so at that time, I analyzed what I was doing. I was looking at my strategy. I was trying to figure out what was working. And I discovered that the stocks I was making the most money on were in this sort of very specific price range, very specific range of float, which I'll talk about in a second when I talk about stock selection, because I continue to trade those types of stocks today. But because my account was basically now on its last legs, I thought to myself, if I could just focus on sort of snipe entry, like get in, get out, get in, get out, like don't hold anything overnight, because I cannot afford to lose more of my account. I actually sold things that I had in my barn to raise money. I sold things on Craigslist to get my account back to 25,000. So I got it back to 25K by selling stuff in my garage and my barn. And I was like, okay, this is my last shot. So I have to be a sniper. Get in, get out. And so that kind of brought me to the approach of just taking quick entry, quick exit, quick entry, quick exit. And if I could just take 1 or 2 trades a day and I was small green, that would be building a track record. So in those days, I wasn't using the 10-second chart. That wasn't even an option. So again, if you don't have access to the 10-second chart, I don't want you to feel that this is not applicable to you, because you can still scalp trade breaking news without it. But let's talk about how to use that 10-second time frame. So when it was about, gosh, I don't know how many years ago it was now that I started using the 10-second chart. I never used it. And then, I don't know, maybe it was 3-4 years ago, I noticed it was even an option. And I was like, that's crazy. And I heard about a couple other traders who were using short time frames and sort of unusual time frames. I heard of some people using like a 2-minute chart or a 3-minute chart, and I had never used those either. And then I heard some people using like a 30-second chart and a 24-second chart. And then I just noticed that if I clicked on time frame, I could go down to a 10-second chart. So 10-second chart here, we've got 10, 15, 24 seconds here. So when we built Day Trade Dash, which is the software that you see on my screen, I said, for our charts, we've got to have 10-second charts, because I had at that point been using them with eSignal. Now, eSignal is a platform that I used for many years, almost probably 10 years. It's a popular piece of software, but it's also a bit, I guess I'd say it's a bit old at this point, a bit dated, and they charge $172 a month for it, which is a lot of money just for charts because their scans aren't that great. They do have a news feed in there, but anyways, it's mostly just charts. So when we built out Day Trade Dash, we included a 10-second time frame, and you can get 10-second charts on TradingView. I think it's $75 a month because you have to have the highest subscription to get those charts. If you subscribe to Day Trade Dash, you could get them as well. But anyways, wherever you get them, it doesn't matter. But the 10-second time frame I find to be helpful. So the way I have my charts laid out is I've got my 1 minute, my 5 minute, my daily, and then I've got my 10-second chart right down here in the corner. And for some trades, I don't even look at the 10-second chart. I'm not even thinking about it. I'm not even not using it at all. But there are other trades where I'm using it quite a lot. So let's sort of zoom in on what this looks like. If we look at, let's start with gnln, looking at the 1 minute chart. So this is the 1 minute chart. If you're trading just on the 1 minute chart, where would you have taken your first trade? Maybe right here, right? Maybe that sort of micro pullback there at about 750. I took my first trade at 485, right down here. Okay, so no doubt that was $2 a share earlier than someone who just uses a 1 minute chart, right? So how did I know to buy right here? It's kind of a funny spot to buy. It is a funny spot if you look at the 1 minute chart, but let's look at that on the 10-second chart. So on the 10-second chart, we get zoomed in here. And what you're going to see is right at about 485, we had this little pattern. What does that look like? This to me is sort of a primitive, imperfect ABCD pattern. Pop up, pull back, back up, back down, right through that level. Okay, so that right there, that entry right there is actually an ABCD pattern. And now it's incredible because you wouldn't see that on a 1 minute chart, but now you can see it here on the 10-second time frame. It pops up to $6, it pulls back, and then this is a flat top breakout. It's even a first pullback right here off of 550. And then we go up to 7. And then we have this pullback at 7, which was fine, goes up to 750, another pullback right here, and you're continuing to trade all these pullbacks as it squeezes higher. So each of these pullbacks represent opportunities to trade this. And we'll actually dive into the trades in a little bit more detail in just a moment, but that's the reason to use the 10-second chart. Now, having said that, if you're scalp trading breaking news, what you're really looking at most of the time is your level 2 window right here. This is what you're watching, your level 2 window and your time and sales, because this is going to show you all of the buyers on the bid, all the sellers on the ask, and the flow of orders that are going through. So even if you weren't looking at candlesticks at all, you were just looking at the level 2 and the time and sales, you could start to create a mental image of what the chart looks like. So right now, as I look at this, I know we've got a high of about 790, 798, a low of about 787. So I can already start picturing kind of a single candle here. And the longer we watch it, the more I'll kind of remember, oh, we just popped up to 8 or to 810 or to 815. That's the recent high. Or, oh, the recent low was 770. And you start getting a mental picture. Now, if you think back at some of the traders in the older days who were tape readers, they didn't have charts. When you're talking, you're talking about 100 years ago. Traders who were trying to actively trade on the market didn't have access to computers and these stock charts that we have today. But what they could do is they could read the tape. There was a consolidated ticker tape, and that would produce a flow of all of the orders going through. So they could subscribe to it, and it would come through almost through like the telephone lines, and they would get this printout on a piece of, it almost looks like Scotch tape, a roll of paper that comes out, and it's just printing the symbol and the price, symbol and the price. So it's making this kind of print it like almost like a typewriter sound, but it's a little bit more. Anyway, so I have one. I don't have it in my office, but it's an old one from, I think, I don't remember the year, early 1900s. Nonetheless, so those people were trading and creating a chart based on just what they were seeing. So they were visualizing this was the recent high, this is the recent low. Okay, we're mapping out. If we break new highs, we're breaking resistance, we should get a move higher, right? So in a way, as a breaking news trader, that's exactly what I'm doing. And even to further emphasize this, when I trade an initial public offering, when we're trading an IPO, you know what the chart looks like? Let's pull it up. So when we're trading an initial public offering, let's say it's, doesn't matter which one it is. It's initial public offering. The chart looks like that. So it looks like there's absolutely nothing. I got to close this because this isn't here either. So just hide that. You've got nothing. And then it starts with just one candle. And so you're working with basically nothing. And at times when I've traded initial public offerings, and this was a few years ago, many years ago now, the software I was using before eSignal, which was TC2000, sometimes didn't load the IPOs correctly. So I would actually trade the IPO without any charts at all. I was trading it just using level 2 time and sales. And I was just visualizing what was the high, what was the low. So it is possible to trade without charts. I wouldn't recommend it, but it is possible. The problem, of course, is that you'll have no idea what daily support or resistance looks like, right? And now with an IPO, it doesn't matter because there's none. But with a stock that has breaking news, that would be a problem. Okay, so now let's get back into gnln, and we're going to start to do this case study. So my scalp trading strategy can be broken down into 5 steps. Like all of the other strategies that I have, these are the 5 fundamental steps. And we're going to analyze exactly how I proceeded through each of these steps before I took my first trades on gnln. So step 1 is finding the stock. So how did I even find gnln? That's step 1. You've got to find the stock that's moving. So the way I found this was right in this software right here, but you could use other scanners or whatever. Some people might have found it on social media, but you would have been a little slow to find it there because someone first has to see it on a scanner and then post it. But what ended up happening was right at 8:30, this started hitting my high day scanner. Now it would take a while to scroll all the way back, but you see when these stocks hit the scanner, it looks like this. You get this alert. And depending on which scanner it's hitting, the color will be different. So we get these different scanner alerts. These scanners are searching for different things in the market that I've told them to look for. And they're very obedient. They look for just what I asked for. You could turn on your audio alerts on these. You set your alert to whatever you want. You save it. I set audio alerts only for some of the scanners, not for all of them. So low float, high relative volume. Low float, former Momo stock. Squeeze alert up 10% in 10 minutes, right? So you go back, and if we went all the way back, you would see right at 8:30, exactly at 8:30, gnln started hitting the scanner at about $2.56 or 58 cents. Okay, now at that point, gnln was at the very beginning of this move. So let's go back to kind of what we're going to do here is we're going to dissect these 13 candles, the beginning of this move, and go kind of candle by candle. I'm going to show you my trades and what was happening in each of those moments. Okay, so this is going to get us zoomed in here on the first candle. All right, so we'll go auto like that, auto like that, auto like that. And this at the time was our daily chart. So I pulled up the daily chart. Looks like I accidentally put text there. So the first thing that I noticed on this, gnln hits my scanners. All right, so step 1, we've now found a stock. Okay, now it's not a 220% gainer yet. At the time that it first fires off, it's up about, let's see, when it was hitting at 285, so right here it starts popping up. At this point, it closed yesterday or Friday at 240. So by the time it's up to 260, it's up 10%, 280, 290, it's up about 25%. And this morning we had a bigger mover, PSIG, up $2.15, up 100%. I actually lost on that. That was my first trade of the day. So I went red on PSIG, and I can talk about that trade in a moment at the end of this case study if there's time. And then I made back that loss on TRNR. So ended up, by the time gnln came up, I was up about $3,000 on the day between these 4 stocks I had traded. So I was in the green, but we didn't have anything that was really at that moment looking phenomenal. And then all of a sudden gnln hits the scanner. So step 1, I see it hitting the scanner and I know that it's the right type of stock to trade. Now, how do I know it's the right type of stock to trade? I know because I have a very specific set of criteria that I search for every single day. So the skills required to complete step 1 is an ability to know how to use stock scanners and an ability to understand what type of stocks have the potential to make big moves. Now, for Warrior Pro members, you're going to find more about this in Chapter 3 of the Warrior Pro Day Trading Strategies and Scaling course. For those of you guys checking out free content on YouTube, you'll see this class has more info about it as well. Number 3, you need to know the type of stocks to avoid. So when this first hits my scanner, I'm looking at gnln and I'm thinking, does this meet my criteria? So I'm looking at the percentage change. I'm looking at the symbol. Do I recognize it? I don't recognize it. I'm looking at the price. The price is fine. And by fine, I mean it fits within my criteria. So my criteria here is going to be, generally speaking, I want to be trading price between 2 and 20. I want to trade percentage up at least 10% on the day. Relative volume, at least 5. I like to see that there's news, so that should just be positive. And I like to see the float is under 20 million shares. And I know that lower is, of course, better for the imbalance between supply and demand. So in this case, these are my sort of preferences. And our actual was float, something like 500,000 shares. News, yes. Relative volume met the criteria. The percent was already about 25% when I was first looking at it. And the price at that point was about $3. So check, 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 check. We met all of the criteria that I felt for basic stock selection. Okay, so that's good. So that checks out. So then the next step is trying to understand why the stock is actually moving up. And so step number 2 is to check to see what the news catalyst is. Now, gnln has announces non-binding letter of intent to be the exclusive distributor in the US of safety strips, incorporated fentanyl and whatever this is, and drink spike detection test strips. So, you know, that's interesting. I mean, it's obviously a headline. I didn't really, when I first saw it, I was like, well, at least there's news here at 8:30, right? At least there's fresh news. That's better than we can say for some stocks. And you have to have an ability to understand the different types of news headlines that come out, because some don't move the market at all and others have very significant impact on price. So you also have to have an ability to separate logic of the news from the price action. Your logic might tell you, I don't know about this news headline. I don't really like that. But the price action is the stock's going up 200%. Focus on the price action. Stay away from trying to overthink it. And you have to have an ability to understand fundamental analysis and SEC filings. So you can go in and you can try to understand, is this a stock that has a high likelihood of doing a secondary offering? Are they going to raise money on the market? Are they going to sell shares? What's their balance sheet? Are they losing money right now? What's their cash position? So, this is all an important factor, especially when you're thinking about taking a trade for day 2 of continuation. So then, so we did our sort of initial due diligence here, and we identified there is a catalyst, there is a headline, and that's why it's spiking up right here at 8:30, which makes sense. And it goes immediately in 2 minutes from 250 to 350 to 4 and 450. I was like, holy smokes, that is crazy. So it hits 259, and then you have this red candle that drops back down to 4. Now, as I pulled it up right here, I started watching it. And what I noticed was that the spreads were a little bit bigger. So now I'm starting to do a little bit of step 3, technical analysis. All right, so I guess we don't have to be full screen. So technical analysis is the process of analyzing, dissecting the charts, looking at the volatility, looking at the position of the moving averages. The skills required to perform technical analysis is an ability to understand candlestick shapes, patterns, your technical indicators, support, resistance, and buy and sell signals. That's an episode with 1.7 million views that's been pretty popular on how to read candlestick charts with zero experience. For Warrior Pro members, where you're going to want to go here is into your members dashboard right here, and then into education portal. And by the way, I have 9 new sections that are getting uploaded right now, which you guys will be excited to see. And then you can go into day trading the basics. But for those of you that have access to strategies and scaling, you'll want to go into strategies and scaling, launch the course. And the intraday chart patterns is where we're really going to get focused. These are all the intraday chart patterns we're going to look at. Then we, of course, get into Chapter 6, Level 2 tape reading, Chapter 7, Gap and Go, Chapter 8, Momentum Trading, and we've got some new setups that are coming here. And then that continues into Day Trading Strategies and Scaling, Part 2. So that's where you guys want to go. All right, so back here. So we start doing the technical analysis, and I also at this point pull up the level 2. So I'm beginning to look at the depth of the market. I'm trying to visualize the price action. And the first thing I look at when I pull up level 2 is I look at the bid and the ask. I look at the spread. We've got a 5-cent spread right here, 780 to 785. So now when I look at something like that and I pull up my my whiteboard here, I'm thinking, all right, can I take 7,000 shares of this? Right? Well, if we have a 70-cent spread, right, 7 times 7, I'm going to be risking $5,000 on the spread with 7,000 shares. So I can't take 7,000 shares if we have a huge spread. But, you know, if the spread tightens up, then I might be able to. So I'm starting to kind of make the decision of how much am I risking? How much is my profit potential? And what kind of share size can I take? Okay, so on this, I'm starting to get dialed in here, and I see it popped up to 484. It dips down. It goes back. It dips down quite a bit to 4. So that's the 70-cent drop. Then it comes back up to 474, and then it dips down again. And right here, as it broke through that level, I said, all right, I got to jump in. So I bought 1,500 shares as it broke this level right here. I took a starter at 473, and I added at 483 and 490, which gave me about a 483 average on this first trade. It ends up going up to 515. So we zoom this in here. So at this point, I'm really just looking at the 10-second chart, and I'm watching the level 2. We hit 516, and I add at 516, and this thing spikes to $6 on the offer. $6. Now remember, my average is about, well, now because I added at 516, it's come up a little bit, but I still have a great average at under $5 a share. Okay, so now let's see. So now that was my first entry. I end up taking profit. The best exit I filled was 460 shares at 586, which was pretty good. I sold a little bit more at 547, and then it starts to dip down here. You can see it dips down, and I take some more profit at 534. And at this point, I'm up a couple $1,000s on it. I'm kind of like, I'm a little bit unsure what to think because it's a big topping tail, and we sort of dropped back down to 520. But at the same time, the trend is still clearly positive. So at that point, I glance at my 1-minute chart. I glance at the 1-minute chart and I see that we've got this spike up to 6, right? But the 1 minute is now just showing 4 green candles in a row. We haven't even had a pullback yet. So I'm thinking, all right, this thing is just very, very strong. This is really impressive. So we go sideways a little bit more right here. And I end up adding back. We have this dip down here. So I added back 1,500 shares right about here at 557. And I add at 565 and 571 and 580. So now I'm scaling in and I'm looking for that break through $6. It comes up, I take some profit up around 6, it dips down, it pops over 6, and right here we squeeze up, I'm gonna go auto, we squeeze up to 620, 655, all the way to $7 a share. Unbelievable. As it starts to pull away right there, I had taken some profit around 6, and then I added back as it pulled away. So adding back as it pulled away, basically what I do is I watch to see if it can hold this whole dollar, and it did. And so I added with a stop right under 6. So if we talk for a moment about stops, the entry right here, the stop was the low of this candle here. So 1,500 share starter, stop is 440. So I'm risking about $500, not quite, on that entry. Then when I'm adding up here, I'm moving my stop up a little bit. And then I add more, and now my stop is break even. So I start moving my stop order up. Now, a beginner trader is not going to be as likely to want to get into adding to positions. Most beginners are going to want to take one entry, one exit. Get in, get green, get out. Once you've done that for 6 weeks, 8 weeks, just one trade a day, just, one entry, one exit, you've built a track record of success. Now you can start doing 2 trades a day, 3 trades a day, 4 trades a day, and increasing. And truly, you can make a living on just 15 cents a day out of the market. You don't need to be getting $1 a share. 15 cents a day with 1,000 shares is making a great living. Now, I'll say as always, my results are not typical. And of course, trading is risky. I think you already know that. It should go without saying, but I'll just reiterate it here. I have been doing this for a long time, and we're going to talk about some of the skills required here at this sort of next phase, because now what we're getting into is step 4, which is actually executing your orders, taking your trades, buying and selling. All right, so in order to buy and sell, you need to clearly know how to use trading software with hotkeys. Hotkeys allow you to rapidly enter and exit positions just by pressing the keys on your keyboard. Let's see, I can pull this forward here. So just by pressing Shift 1, I could be buying, Control X, Control Z is selling. So one button to buy, one button to sell. Well, it's 2, but it's one hotkey. Shift 1 to buy, Control Z to sell. 2 hotkeys to start is all you need. Then you can start adding more as you gain more experience. You need to be really good at reading level 2 and tape reading. This is a large section of the Warrior Pro curriculum is dedicated to tape reading because it's so important. That's chapter 6. So chapter 6 here is where we get into tape reading level 2. And you need to be able to read, of course, the tape, and you need to have fast reaction speed. You see something, you press the buy button. You see something, you press the sell button. So that's really required. And I think efficient order execution is important as well. You wouldn't want to try to trade this strategy, at least, on a mobile app, on your phone. There's just no way you're going to be able to keep up with traders using better tools than you. And to that extent, you are sort of competing with traders who have better tools. Now, it's important to say that it's not like there's a Rolls Royce of trading tools where, oh, that guy's got the best tool and he's got such an edge over everyone else. It's fairly level playing field when it comes to tools because there's only a few tools you can choose from when it comes to trading. A lot of the members here at Warrior Trading are using Thinkorswim and are really happy with that. I think the majority of our $1 Million Badge holders achieved it with Thinkorswim, which is great. I use Lightspeed, which is a broker I've been using for many years. I'm happy with them. I think they're a great broker, but I do pay commissions on my orders, so that's not ideal. But the execution speed is very fast. Anyways, efficient execution speed is important, but if you're scalp trading, commissions are also something to consider, because if you're taking 100 or 200 trades in a day, yeah, you've got to be thinking about commissions. Okay, so we'll move this back up here. So at this point, we get our first couple trades on gnln, and we get this pop up to 7 right here. So I end up adding for the squeeze to 7. I take some profit at 675. It dips down. So we're going to start getting dialed in here. So initially that was the stop. Added back here when it was at 547. Stop was about 520, low of that pullback. Added up around 6, and I was using level 2 to visualize that there was support at 6. Then it goes up to 640, 650, all the way up to 7. It pulls back, micro pullback here. We get this false break over 7, and we dip back down. So that was the first kind of like, ooh, are we going to have a red candle form? And at that point, we still didn't have a red candle on the 1-minute chart. The 1 minute was just green candles. It was ridiculous. I was like, I don't know the last time I saw this many green candles in a row. So when it got back above 7 and held, retest, that's the spot to be adding back for the squeeze higher. Now, a lot of this, for those of you guys who are listening on YouTube, a lot of these pullbacks are part of my micro pullback strategy, which you can trade both on 1 minute, but also 10-second time frames. So I would encourage you to download my micro pullback strategy as a PDF. So micro pullback strategy PDF. That will be linked. So there'll be a link here, that sort of link symbol, whatever. That'll be linked in the description, and it'll be linked in the top of the comments. So pin to the top comment and link to the description. All right. So check out the micro pullback strategy PDF if you haven't already. So then we get another little dip right here. That's a micro pullback off of 7, and it goes up to 750. Now it does dip back down to 7 here, and then it pops up 750, pulls back a little bit more, and then all of a sudden it rips through this level, 756 up to 8. Now at about this point, where was it? So about this point here, I started thinking this thing is really due for a pullback. Yeah, it was around 760. So I was like, this thing is really due for a pullback. This candle actually dipped down and it went red and then ripped back up, which sort of had the effect, I think, of trapping some early short sellers because it looked like it was rolling over. It looked like we were done. Where was that? It must have been right here. So it looked like we were kind of done, and then we popped back up. Let me just check. So that was, the time here was 8:39. Okay, 8:39. So 8:38, 8:39. Okay, so it must have been right here. We dip down, and then we rip back up here. We break through this 770 level, and once again, I'm like, okay, it's game time. So I'm adding at 728, 732, 738, 748, essentially adding every 10 cents as it's pushing higher. And each time I add, I move my stop a little closer. And I'm trying to accumulate a larger position to try to get that 15, 20 cent move. And we ended up getting it. We got this beautiful move right here, all the way up to 8, up to a high right here of 870, pulls back, micro pullback, gets bought up, pops up to 9. And this is where we sort of top out, right about $10 a share right here. Now, at that point, and I continued trading that whole leg up. I was trading at 850. I was trading up at 9. This is the way I trade these fast-moving stocks. And again, to kind of reiterate why scalp trading, in my opinion, can be a great strategy is it's the only way you would have been able to trade up in this area. When something is this extended, your MACD is open, of course. MACD is confirming the trade. Volume, great. Volume profile, great. Those indicators aren't going to really tell you no. They're just going to say it's extended. And so the only way to manage your risk is to take quick entries and quick exits. Quick entries, quick exits. So we finally get this squeeze up to 10, and we hit a high right here of 1028. And this was my, so right here I was up 24,000, and I took this trade right here. I bought this dip, was looking for the break through this level, and I stopped out. And I lost 2,200. I gave back 10% of my profit, and I was sitting up 22,000 on the day. And I was like, okay, I just gave back 10% of my profit right here. Let's slow down for a minute. That was my first big loss on it. And at that point, we had our first, this was actually, where was this? This was at 10 or 850. So it was right, yeah, it was right here that I had that trade, 850. So we had the 1 minute pullback, but the MACD was starting to go a little negative. I was taking a little bit more risk there. And then that was, all right, now MACD crossed over. So that right there marked kind of the end of that first leg up. We end up pulling back here, and we get this kind of dramatic price action. We ended up curling back up. We had a support level here. We did curl back up. I got this trade right here, and a moment later, it dumps all the way down here. And I was like, that's it. I'm going to be hands off. I did not trade it in this area, and I did not trade it at the open. I just was waiting for it to break through these levels. And what I said was that, yesterday when I did my game plan for the week ahead, I was thinking the market's been slow for these last few sessions. What we need is a stock that has breaking news and ends up going crazy. Because what that's going to do is it's going to get a lot of traders off the sidelines. Small cap momentum traders who traded alongside, they're going to feel some FOMO. They're going to want to participate in the next move. Short sellers who have been feeling confident in the last few days might have started shorting this, in here, in here, in here, and certainly in this area when this candle went red, boom, squeezed out. More volume comes in here as there's short covering and longs buying. That's why I think there was more volume here, because you have both longs and shorts buying. Get that extra squeeze up to 10, pull back, pop up, little rejection, goes a little higher, drops down again, a little higher, big rejection, and now another big one here. Now you're starting to get a pattern of rejecting. And so after that MACD crossed over, if you watch my episode I recorded just a couple weeks ago on using the MACD, you'll know that the safest time to be trading these is when the MACD is open, right? Above the signal line. And that ended right here, and it actually never came back positive. Maybe for a fraction of a second here, but not really. Let's not count that, because it was clearly coming down. So, the big question now for me is, how well does this hold up over the course of the day? Because if it holds, it's below VWAP right now. If it holds up relatively well, if we get back above VWAP or make new highs, then continuation to tomorrow, that's a victory, and that's strong sentiment. If it continues to fade and just makes its way all the way back down, that's more bearish. And shorts will sort of ultimately feel like, well, maybe I would have been red, but if I just held long enough, the trade ended up coming back down. So where this closes today, I think will, to a certain extent, determine how much momentum we can expect in the days ahead. Now, of course, it's true that PSIG is up 126%. This one ended up putting in a nice move. TRNR, however, that one's come back down quite a bit, right? SXTP, this one squeezed up, came back down. WHLR, this one squeezed up, came back down. Real Estate Investment Trust, a REIT, usually, but the float's so low, recent reverse split. So, I'm not sure what's really realistic on some of these, but gnln is still our leading gainer. But if you sat down right now, well, there's nothing to trade, right? You would see, boy, that put in a huge move earlier, and darn it, I guess I missed it. So I think something that's an important reminder is the fact there will always be another one around the corner. I didn't know today was going to be a $24,000 green day. There's no way that I had any inkling that was going to happen today, but it ended up happening. I show up every single day, and I trade what's in front of me. So now let's talk about step 5. Step 5 is reviewing your analytics. It's very important to review your analytics, and you need an ability to understand how to read your metrics, how to highlight your weaknesses, how to highlight your strengths, and to analyze where the majority of your profit is coming from. Because that's when you can double down. That's when you lean in to what's working. And that's so important as a trader. Now, I also want to share with you the tools required to be scalping. Because if you want to scalp, certainly at the level that successful traders are scalping at, you do need access to your own scanners so you can find those stocks in real time when they start popping up. You ideally will want 10-second charts so you can visualize those micro pullbacks as they're happening. You're going to want customizable level 2 so you can change the colors here so you can very clearly visualize the top tier of the level 2, which is the best bid and the best offer, best buyer, best seller. You need to be able to see the halt levels. I think that's really important. Now, pre-market, there's no halt levels, but during regular trading hours, there are. You'll need hotkeys, at least to buy and sell, but better hotkeys are always great. And no doubt you'll want to have some analytics for analyzing your metrics. Now, I want to share my reading list, and I also want to give you guys a link to a 2-week trial at Warrior Trading. Those of you guys who are streaming on YouTube here, that will also be pinned at the top of the comments and linked in the description, side by side with a micro pullback strategy PDF. So you guys can check out both of those, because you know what? Over the next 2 weeks, who knows? It's possible that the next 2 weeks will be slow, and I'll have, a 2-week stretch where there's not a lot going on, in which case you'll learn, hopefully through my lead, that discipline and patience are a critical skill for long-term success in trading. Or, we may end up seeing another little hot streak here. So when we look at my P&L over the last 90 days, you'll see sort of slow, steady, big gain, and then kind of slow down again. Well, today is going to be a nice $24,000 jump. So that curve is going to squeeze right back up. And I would love to see another, couple days like this. What we often see is that the big green days are clustered together, right? So the reason the big green days are clustered together is because when the market is hot, it amplifies momentum. There's a lot of FOMO. Traders don't want to miss the move, and me included. So everyone starts trading with bigger size, more aggressively. There's more liquidity. There's more volatility. And next thing you know, you're seeing back-to-back big winners. That's almost always the case for me. Now, it doesn't mean that tomorrow is guaranteed to be a big winning trade. It's not. It depends on how gnln closes today. That's certainly a factor. And if there's other stocks that pop up. But statistically, the odds are higher that there's going to be some good volatility tomorrow. So I encourage you guys to do a 2-week trial so you can trade over my shoulder and watch during the next 2 weeks to see what kind of action we have. Now, when it comes to a reading list, I want to share some books with you that I always recommend for beginner traders. The first one that I'll share with you is Trade Mindfully. This is by Gary Dayton, and it's Achieve Your Optimum Trading Performance with Mindfulness and Cutting-Edge Psychology. This book was written many years ago. It's not a new book, but it is a great book. And this is published by John Wiley and Sons, which is the publisher that offered me my book deal right here. They offered me a 2-book deal. I didn't end up taking it because I didn't like the terms of their contract. So I said, you know what? I already wrote the book anyway, so I'm just going to publish it myself. So anyways, you guys can check out a copy of my book, Trade Mindfully, How to Day Trade, The Plain Truth, Quit, The Power of Knowing When to Walk Away, by Annie Duke. This is a book I've read several times. I really find it to be fantastic. I really enjoy it. Thinking in Bets, another book by Annie Duke. The Happiness Advantage. This is important. To be a trader, you have to be eternally optimistic, and you have to have incredible resilience. You got to be able to brush the losses right off your shoulders and bounce back. And I think this is a book that'll help give you that perspective. So these are I would say these are 4, no, that's actually 5. 5 of my favorite books. Now, there's a couple of other interesting books just for entertainment's sake that you could check out. The Little Book of Market Wizards right here. This is a popular book that a lot of people like. And Dark Pools right here is another very interesting book about the rise of machine traders and the rigging of the U.S. stock market. Very interesting stuff here. And these are all, pretty sure all of these are available on audiobook. I know, I'm sure all of them, at least except for this. This one, I don't remember if this is available on audiobook. I didn't listen to it on audiobook. It might be. Anyway, so some recommended reading for those of you guys that want to continue your education. Because the fact is, learning to trade is a marathon. It's not a sprint. It's not going to happen overnight for anyone. It didn't happen overnight for me. My success with trading, it was a rocky road. It took a long time to get to where I'm at, which is why I always remind people that my results aren't typical. But I know that many of you are learning from me because my experience has been so unusual. And I feel incredibly grateful for that. And I'm always happy to share with you the things I'm learning. I was just having, over the weekend, I was visiting with my uncle, who in the spring will celebrate his 50th year as a college professor. 50 years, 50. He started teaching in 1974. I think it was 1974. Yeah, 1975. Spring of 1975, January of 1975. And I gave him a copy of my latest book here, which I hadn't given him yet. And I said I wanted to thank him because he has always been an inspiration to me because of his commitment to learning. He was an uncle who always bought me books, around Christmas time, and it was always like, oh my God, another pile of books. But he's so academic. I mean, he likes learning so much. He's been a teacher for 50 years. He's in his 80s, and he's still teaching. And once you have tenure at a college, you can continue teaching. I don't think they can force you to quit. I don't know, maybe at some point. But anyways, I really enjoy teaching, and what I've learned through my own experience teaching is that some people don't understand this, but it's really a pleasure to share something you're passionate about with other people who have a similar interest. So thank you guys as always for tuning in. Those of you guys watching on YouTube, I hope you hit that thumbs up. I hope you're subscribed to the channel for more episodes about trading strategy just like this. And I'll see you guys for the next upload real soon. And I'll remind you once again that trading is risky. So manage your risk, take it slow. And I'll see you back here. I'll be live streaming bright and early tomorrow morning. So I'll see you in the morning.